Hello friends, as a part of CTC Gyanshorts, we will discuss in this video the key changes proposed in the new upcoming Ind AS 118, which is on presentation and disclosure in financial statements. Ind AS 118 is based on IFRS 80 and will replace Ind AS 1. The effective date proposed for the new standard is 1st April 2027. Ind AS 118 does not change how profit is measured, but changes how financial performance is presented and disclosed. Some requirements have been moved to Ind AS 8 on accounting policy or Ind AS 107 on financial instrument disclosure. Consequential changes have also been made to other standards, which we will discuss in the later part of this video. The standard focuses on how companies present financial performance in their statement. As mentioned earlier, it does not change how profit or loss is measured, but it affects the presentation and disclosure. The main goal of the new standard is to improve clarity, comparability, and transparency, and cater to the needs and concerns of investors and analyst community. There are three main changes as compared to the earlier standard, with an overall objective to improve the reporting of financial performance. These three changes are: present two new subtotals in profit or loss, disclose management-defined performance measures, and follow enhanced rule for grouping and breaking down information, that is aggregation and disaggregation. Let's come to the first change. Ind AS 118 introduces two new subtotals, operating profit or loss, this being the star of the standard since it is the most important common number which users are interested in, and profit or loss before financing and income taxes. All income and expenses are classified in 5 categories, namely operating, investing, financing, and income tax and discontinued operation. As you would know, the operating would be basically the main activities of the company, and it's a residual category. The second one is the investing item. The third is the financing category, which would cover the interest on loans and bonds, leases and pension liability. Fourth is income tax, which covers income tax expenses or tax income under Ind AS 12. Discontinued operation, which is items which are recognized under Ind AS 105. Special businesses like banks or insurers classify what would normally be investing or financing activity as operating, and this aspect has been dealt with separately in the new standard. Expenses must be presented to give the most useful structured summary, either by way of a nature or function or by way of a mixed. Some of the examples are: by nature would be raw materials, salaries and advertising; by function would be cost of sales, distribution and administration; and mixed approach uses the combination of the above two. Now let's move to the second change, which is introduction of management-defined performance measures. MPMs are subtotals of income and expenses used outside the financial statement and included in public communication to show management's view of company's financial performance. Example, adjusted profit or loss. For MPM to improve transparency, companies must ensure that all relevant information as regards the MPM is disclosed by way of a single note. One of the key requirements is to reconcile the MPM with the most comparable total or subtotal defined in Ind AS. How the MPM are calculated needs to be disclosed. In addition, the company needs to disclose the tax effect and non-controlling interest effect of the MPM. In respect of aggregation and disaggregation, Ind AS provides more detailed and stricter principles to give aggregation items with similar characteristics or to avoid too much information, disaggregate items with dissimilar characteristics, disclose material information in primary statements, that is useful structured summary, and avoid an additional information to details in notes. Avoid using others unless no better label exists. Labels have to be precise as possible. Now let's go to the consequential changes. The consequential changes are mainly in 3 standards. The first one being Ind AS 7 cash flow, which is use of the operating profit as a starting point for the cash flow statements. The second is Ind AS 33, which is that additional EPS disclosure are allowed only if the numerator is a total subtotal in Ind AS 118 or an MPM. And Ind AS 34, which is interim financial reporting, which require that MPM should be disclosed and subtotal requirements also apply to the interim financial statements. Last but not the least, let's go to the implementation and transitional challenges. One key challenge would be to align with the regulatory format, which is under Schedule 3 and the quarterly requirement under LODR. The totals and subtotals there would have to match with the Ind AS 118. The second transition challenge would be that in terms of the previous year comparable figures, that is 26-27, and hence early testing of the ERP, early testing of the or changes in chart of accounts, consolidation tool, so that they are updated, needs to happen at the earliest. The next transition challenge would be in respect of the judgment which is used for the purpose of classification, and there is to be a consistency and clear guidelines for those judgments. So all in all, I think the challenges would require that there is a proper planning both at the group level, so that the MPM compliances also happen formally by way of a documentation and reconciling it with the subtotals. As mentioned earlier, the use of generic term like others need to be reduced to bare minimum, and greater disaggregation will increase the note disclosure. To summarize, I think the objective is to standardize profit and loss and balance sheet structure, introduce mandatory subtotals for operating profit, and to classify income and expenses in one of the 5 categories, strengthen disclosure and aggregation rules, enhance comparability and transparency. And in simple terms, the profit, though it remains, the calculation remains same, but the presentation becomes more structured, transparent and comparable. And besides presentation, it will affect system controls, KPIs, regulatory reporting and the overall audit processes. So friends, this is the main changes which are there in Ind AS 118. What I have done is only summarized it in a short period of time, but you will have to study the whole standard in detail for its application and implementation. Hope you find this video useful. Thank you very much.